welcome. You're with us here on Business Today. I'm Ava Bakaya. Here are the day's top stories. Wipro walks the talk on moonlighting, fires 300 employees found working for a rival company. Rishad Premji says moonlighting is violation of integrity. Gautam Adani tops the Hurun India rich list, added more than 1,600 crore rupees to his wealth every day in the past year. IPOs catapult promoters of Nykaa, MapMyIndia, Aether Industries into the rich list. Jitters in the stock markets ahead of the big decision on interest rates by the US Fed. Sensex falls 263 points, Nifty down 98. Cement and power among the big losers in the highly volatile session. Adani shares slip after the group pledges its entire stake in Ambuja Cement and ACC to lenders, seeks to raise money to finance its $6.5 billion purchase of the cement company. SEBI chairperson Madhvi Puri Buch warns algo traders bring in sufficient transparency and disclosures. Says any claim which cannot be audited or validated will not be permitted. The moonlighting debate has taken the IT world by storm in the past month, and one of India's largest tech companies, Wipro, has terminated services of 300 staff members who were found moonlighting. The company's executive chairman, Rishad Premji, has reiterated that it is an act of integrity violation and therefore employees were fired. Listen in.
If you actually look at the definition of moonlighting, Sunil, it is having a second job secretively, right? So that's point number one. Two, I'm all about transparency, and as a part of transparency, individuals in organizations can have very candid conversations. You know, I work for Wipro, I work for somebody else, and I want to, play in a band at night or work on some project that I'm working on, etc., over the weekend. And that's an open conversation, and then the two adult individuals, the organization and the individual, can make a concerted choice about whether that works for them or doesn't work for them as an organization. The point I was alluding to more is the reality is that there are people today working for Wipro and working directly for one of our competitors. Right? We've actually discovered 300 people in the last few months who are doing exactly that. To me, it's a complete violation of integrity in its deepest form. So that was what I was referring to. There's no space for someone to work for Wipro and competitor X, Y, and Z, and I think they would feel exactly the same way if they were to discover the same situation. So that's what I meant, and so I do stand by what I said, that I do think it's a violation of integrity if you're moonlighting in that shape and form.
Yeah. So how is Wipro's tough stance being viewed by D Street? Listen in to Avinash Gorakhsakar of Profit Mart Securities.
Moonlighting has been a very big problem with the IT sector. We have seen companies like Infosys, HCL Tech, TCS, and now Wipro, facing this challenge. Definitely, this news flow about Wipro management terminating the services of more than 200 odd people for moonlighting, kind of developments is definitely a negative surprise in the near term, because that actually puts a spanner in the works as far as talent acquisition is concerned. And most importantly, in terms of credibility to the client, which is very important. Most IT companies work very closely in full confidence with their clients, and therefore, this kind of moonlighting actually upsets the long-term relationship with clients. My sense is in the near term, the stock will definitely react negatively, but in the longer term, it depends on how this moonlighting aspect is completely minimized, because only then, markets would get a clear amount of comfort, from specific IT corporates. Yeah.
We also discussed this burning hot issue of moonlighting with one of the biggest hiring agencies in India, TeamLease. However, there are good times ahead for employees of the Indian IT industry as well. Listen in to a conversation my colleague Akansha Chaturvedi had with the Chief Business Officer of TeamLease Digital.
There are many trendy words that have been catching up with the workforce in the IT sector. People say people want to moonlight, as in take up multiple, take up side gigs or have a secondary employment. And there's like a new trendy word called quiet quitting, that we do only the bare minimum which is required. So is this because there is a disconnect between the employer and the employee? And what is actually causing all of this conflict?
Well, I mean, the world is divided on this. Few people are saying it's highly unethical, but the startup world is more encouraging on on moonlighting. But I think for me at this point of a policy point of view, we don't have a framework where an employee can have two jobs at this point of time. So I think the legal framework does not permit anyone to have two employments. But I think gig over a period of time or moonlighting, what they're going to call or what they're calling is going to catch up in the coming years. And that we see as a trend that people will work on multiple projects with multiple customers, but we will have to see how the policy changes are going to take place in this matter.
All right, so talking about employees, and the attrition rate in the IT sector has, touched record numbers. The attrition rate at Wipro doubled in 4 quarters. So Wipro actually introduced a few HR policies, as in they had quarterly promotions, freshers had a 5-year career path and stuff like that. So could you tell us how this actually impacted the attrition at Wipro, and are these policies actually helpful, and should other companies also take them up?
Well, there are two elements to this. One is attrition is not just compounded to an organization, but I think leave aside the names. If I was to say why attrition, one is that the super cycles of digitization has led to a huge opportunity, and that has created a lot of supply versus demand gap. Point number one. And you also see a lot of global players who are coming into India. The GCC market, which is about 1,400, is going to move to about 2,500, 3,000 as per the market estimates. So there are global players who want to come in. So I think attrition is going to continue, irrespective of what the macroeconomic conditions are.
What do you think would be the outlook of jobs and outlook for the industry in general in the coming time?
Well, we expect the jobs to double. We expect the IT employment, which is currently at 4.5 to 5 million, growing to about 9.5 to 10 million over the next 5 years. So the industry is going to grow, and the job market is going to be very upbeat. I mean, the trend that we're currently seeing of a hiring freeze is just a sine wave because of the macroeconomic conditions. But I think we are poised for growth, and that growth, and India is in the right place for that growth.
Markets snapped their 2-day winning streak, dragged by losses across most sectors amid nervousness ahead of the FOMC's meet. Sensex slipped 263 points to 59,457, and the Nifty tumbled 98 points to shut shop at 17,718 as traders awaited the outcome of the meet. Cement stocks saw some profit booking. Shree Cement and Ultratech Cement were among the top losers. Adani stocks saw a major fall, with group companies erasing a market cap of nearly 1 lakh crore rupees today. Other blue chip laggards included Adani Ports, Power Grid and IndusInd Bank. It was the FMCG pack which lent some support in a volatile day of trade. Britannia, HUL, ITC were the top Nifty gainers. Other gainers included the likes of Apollo Hospitals and Bajaj Finance. Markets across the globe have their eyes set on the outcome of the US Fed's FOMC meet, which will be out in some time from now. Most economists expect a jumbo rate hike, as the Fed has made it quite clear it is focused on taming red-hot inflation in the US. What should one expect from the Fed this time around? My colleague Sakshi Batra is standing by with those details.
Well, that's right. The Federal Reserve began its 2-day meeting on Tuesday, and all eyes are on what the Fed will be doing as far as the interest rates are now concerned. In fact, many believe that it's not what exactly the Fed does today, but what will it say could actually do in the future that will be more crucial. Now, what the quantum of rate hike will be and the Powell's commentary will be, well, it's anybody's guess, but most analysts believe that the market has already priced in a 75 basis points hike, and this would be the third consecutive time that the Fed would be raising its interest rates. A hike this large would actually lift the US benchmark rate, which actually affects many consumer and business loans, to a range of 3 to 3.25%, the highest level in the last 14 years. Powell is expected to reiterate hawkish stance this time, as inflation remains red hot and the #1 concern for the US central bank right now. But experts say that if he goes for a 100 basis points hike, which also some of the analysts are penciling in, there could be a knee-jerk reaction the next day globally and on the Dalal Street as well. Now, Jerome Powell's commentary around the future rate hikes would be an important trigger to also track. The market wants to know whether we are at the peak of the rate hike, or will the Fed be more aggressive aggressive in the future as well. Remember, steeper rate hikes from here would mean more pain for households and businesses going forward too. But remember that Powell's earlier comments have already indicated that the Fed may not halt the rate hike cycle anytime soon, even at the cost of slowing down the economic growth and causing a recession. Economists expect that Fed officials will forecast that their key rate could go as high as 4% by the end of the year. They also are likely to signal additional increases in 2023, perhaps to as high as roughly 4.5%.
Thanks, Sakshi. The Adani pack was the big loser in the stock market today, with 6 of 7 companies ending in the red. This comes in the wake of news that the group has pledged shares worth $12.5 billion in Ambuja Cements and ACC with lenders to finance its cement play. What does this mean for Adani shares? Will the downturn continue, or is it just a blip? Let's find out.
The biggest merger and acquisition deal in the Indian cement space, with the Adani Group paying a whopping $6.4 billion to Switzerland-based Holcim for its Indian cement assets, Ambuja Cements, and its subsidiary ACC. On Tuesday came the news that Adani Group has pledged its entire equity stake in the newly acquired companies, worth $12.5 billion to foreign banks to fund the deal. Under this agreement, Adani will not be able to offload the shares until this debt is cleared. Shares of several Adani Group companies are already pledged to fund the rapid expansion. Data available with ACE Equity and BSE shows that promoters pledged a 25.33% stake in Adani Power, 13.07% in Adani Ports and Special Economic Zone, 5.90% in Adani Transmission, 3.79% in Adani Enterprises, and 2.19% in Adani Green Energy. The Adani pack shares, which have been on a dose of steroids for the past few months, paused their stratospheric rise. 6 of them fell in trade today, with Adani Enterprises in the deepest red. The only Adani family stock to rise today was the FMCG major Adani Wilmar.
Adani Port looks very attractive. On the other set of companies, I think it's better to be a little cautious. I think obviously these companies have run up significantly and valuations are definitely not highly but richly expensive. So I think Adani Ports definitely could present a good opportunity.
Meanwhile, the Adani Group debt has been the topic of vast discussion. Recently, the group said that its external long-term debt stood at 1.64 lakh crore and not 2.2 lakh crore, with the leverage ratios of its companies healthy amidst consistent pouring down of debt. The group also pointed out that it had cash and cash equivalent of 27,579 crores. Meanwhile, its share prices are rising, making the Adani Group the most valuable industrial house in India, and Gautam Adani the second richest man in the world, with a reported net worth of $150 billion. Bureau Report, Business Today Television.
With algorithmic trading services gaining traction, SEBI had recently issued new guidelines for stockbrokers providing such services. The SEBI chief has today warned brokers who have misused the services. Listen in to what she had to say.
If your business model is going to rely on a black box which is not open to sunlight for disinfecting, if it is not capable of being validated and audited, and your claims cannot be audited and validated, it cannot be permitted. But if it can be audited, can be validated, nobody is happier than us to facilitate new and innovative offerings in the market.
Gautam Adani has topped the list of wealthy Indians, tipping Mukesh Ambani to the post by nearly 3 lakh crore rupees. The rankings were released by research firm Hurun in partnership with wealth management firm IIFL Wealth. There are several surprises in the list as well, as this report shows.
He is already the second richest man in the world, ahead of icons like Warren Buffett, Bill Gates, Jeff Bezos. So it was not unexpected when the 60-year-old industrialist topped the Hurun IIFL rich list, having played a hard game of catch-up with his closest competitor, Mukesh Ambani of Reliance Industries. In the past 1 year, not only has Adani gained 2 lakh crore rupees in wealth to catch up with Ambani, he has raced ahead by 3 lakh crore rupees, a total gain of a whopping 5 lakh crore in 12 months. Adani's current value as estimated by Hurun IIFL is 10,94,000 crore rupees. Incredibly, Adani's wealth rose by 1,612 crore rupees every day in the past 1 year. At the second position is Mukesh Ambani, who increased his wealth by 210 crore rupees every day last year. Cyrus Poonawalla and family has shot up 3 ranks with wealth of around 2 lakh crore rupees. HCL Tech's Shiv Nadar is at the 4th position, while veteran investor and retailer Radhakishan Damani is at the 4th position. The list contains several other incredible details about India's wealthiest. The cumulative wealth of Hurun India rich list is over 100 lakh crore rupees, more than the combined GDP of Singapore, UAE and Saudi Arabia. 12 individuals have a net worth of more than 1 lakh crore, down from 13 last year. India has 1,103 individuals with a net worth of over 1,000 crore rupees. This number is up 62% in 5 years. Youngest on the list is 19-year-old Kevalia Vohra, the founder of Zepto. 100 startup founders with an average age of 40 and a cumulative wealth of 5.06 lakh crore rupees are part of the Hurun list. Meanwhile, the rich list also has several entrants powered by successful IPOs. This includes the promoters of Latent Views, Ather Industries, Nykaa and MapMyIndia. Nearly a quarter of the rich are from Mumbai, with Delhi and Bengaluru bringing up the rear guard. Bureau Report, Business Today TV.
The Asian Development Bank has joined others in lowering India's GDP growth estimate for the current fiscal. ADB has said it expects India's growth to slow down and that it has cut the GDP growth forecast for 2022 to 23 to 7% from 7.2%. The reasons ADB gave for this downgrade include price pressures which will adversely impact domestic consumption. A sluggish global demand and elevated oil prices are likely to be a drag on net exports. The bank follows global agencies in lowering their India growth estimates. While Fitch and Goldman Sachs have lowered their estimates to 7%, Morgan Stanley has set 7.2% as the GDP growth target. Citibank is predicting a 6.7% growth, while Nomura has the lowest figure of all, just 4.7%. Even multilateral agencies like IMF have lowered their GDP growth estimate. The RBI, meanwhile, expects the India economy to grow by 7.2% this year. India's fintech industry could touch the $1 trillion mark by the end of this decade. According to Finance Ministry's Chief Economic Advisor, the sunrise sector, which was pegged at $31 billion in 2021, is likely to explode in the next few years. This next wave of fintechs is seen benefiting MSMEs by making available cheap funding for the sector.
The entire purpose of e-Shram portal, which creates a method of registration for individual informal workers, and then the Udyam portal, which enables micro and small businesses to register themselves on the Udyam portal, and simultaneously they are automatically registered in the GST portal. They get a PAN number. So all of this is about bringing in people who are hitherto excluded, the individual informal, and then once they are registered, then many other services open up to their Aadhaar and the registration IDs, etc. So what is happening is there is also a marriage of these different portals that is happening. Even these government portals are becoming interoperable and interconnected. So, as I said, the entire fintech revolution is not about startups and unicorns, but about ensuring that all these developments come together to be able to provide access to finance and opportunities for individual businesses, micro, small, as well as for low-income population. And that is the entire focus. And it is happening through cash flow based lending, through e-Shram portal registrations, through Udyam portals, etc. And that is why over time you will see even the bank credit data that you are seeing today. Much of the loans are going towards micro and small enterprises in terms of bank credit rather than to large enterprises. All these are all consequences and the outcomes of what has been done in the last 5 to 6 years. And this will only grow even further.
One of the most iconic landmarks in the Delhi NCR region, the Great India Place Mall at Noida, is reportedly on sale. According to reports, the mall's promoter, Entertainment City, is in talks with buyers to sell the GIP along with the Garden Galleria Mall, the Worlds of Wonder amusement park and Kidzania for about 2,000 crore rupees. All the properties are on a 147-acre plot which has around 1.7 million square foot in empty space. Entertainment City is promoted by the Unitech Group and reportedly owes the Punjab National Bank around 800 crore rupees. Even as Reliance Industries readies for rolling out 5G mobile services across India, Chairman Mukesh Ambani is on the pilgrim trail visiting ancient temples over the past 10 days. The 65-year-old Ambani was to visit the Badrinath and Kedarnath shrines in Uttarakhand, but his travel plans were thwarted by bad weather.
8th of September, a visit to the immensely popular Lal Bagcha Raja Pandal in Mumbai. Four days later, the Reliance chairman was at the Srinath Ji temple in Rajasthan's Nathdwara town. On the 16th of September, Mukesh Ambani was at the Tirumala temple in Andhra Pradesh. The next day, the industrialist was seeking blessings at the Guruvayur temple in Thrissur, Kerala. It has been very busy fortnight for the Reliance chairman, as well as for his to-be daughter-in-law Radhika Merchant and his confidant Manoj Modi, who have been by his side in this cross-country run. According to reports, Mukesh Ambani is set to seek divine blessings before the launch of any big project. And 5G is one of the most ambitious projects by Reliance Industries. By his own admission, the company has invested more than 2 lakh crore rupees in setting up the network and securing the required spectrum. During each of his visits, Ambani has loosened his pockets discussing the construction of a new temple with the priests at Nathdwara. At the hill shrine of Tirumala, he handed over a demand draft of 1.5 crore rupees to the Tirumala Tirupati Devasthanam. A similar amount was donated during his trip to the Guruvayur Sri Krishna temple in Kerala. Meanwhile, Ambani's trip to Badrinath and Kedarnath was reportedly cancelled due to bad weather. This coincides with protests at Kedarnath against plans to replace the silver plates in the sanctum sanctorum of the temple with gold plates. An anonymous Mumbai businessman has reportedly donated 230 kg of gold costing over 100 crore rupees. Priests at the temple have opposed the move, saying gold was a symbol of wealth. Bureau Report, Business Today Television.
That's all we have time for on the show tonight. Thanks for watching.